Alright guys, in this video what we're going to be doing is how you should take trades at support levels or how you should take trades at resistance levels. So the concept is generally the same in terms of stop loss placement, entries, and take profits. The only difference here is that we're looking for the trend and we're looking to take these trades at our support or resistance ranges. Again, any time frame will work for these types of setups. You have to just keep the general concept in mind. When we're at support, we're looking to take a buy position. When we're at resistance, we're looking to take a buy position. But all the time, that doesn't necessarily mean that you should be always taking buy or sell positions when you get to a support range or a resistance range, because you have to take the trend into consideration. So when price is actually trending bearish, essentially what you want to look for are your main key levels, being the 4-hour and daily time frame levels, and to try and take positions off of these levels as much as you possibly can. So once price is under an area, you wait for price to pull back into that range, and you want again to wait for price to be established and for that previous resistance range to continue to hold as resistance. Again, so here we have price pull all the way back up. Notice the trend is actually bearish. We're trading under the 21 SMA, and price gave us a nice clean rejection. This is clearly a sample where, or a signal where you're going to look to buy or look to sell, my apologies, in the direction of the trend itself. So we're basically trading from range to range. That's what we're simply going to be doing. We're looking to trade from level to level. Now, when price actually rejects this area of previous resistance, you have to ask yourself, okay, well, if price rejects this previous area of resistance, where can we look for price to travel to next? And that is going to be our next major area of support, which is going to be all the way down here. So we already have a high probability entry signal. We now have a high probability area of where price could potentially travel to. Now, we just have to identify where our stop loss is going to be. Again, we have to identify an area that will invalidate the trade if the stop loss were to actually be triggered, where in this situation, that's going to be above this high right here. So now we identify the positive risk-reward ratio being a 4-to-1 risk-reward ratio on this position. And again, guys, every single thing in this market is a probability. Let's say we have a 70% chance of winning this trade, then we still have a 30% chance of losing. So you have to take that into consideration. And what I mean by probabilities, again, really comes down to, like, let's say we were to have a graph, right? This is going to be the chart that we're looking at here. Let's say we're looking at the S&P 500 index. So we're looking at SPY, right? And let's say we're going to have 3 different ranges we're going to be looking at. We're going to have range 1. Well, I'm going to change the color. Let's put this black. We're going to have range 2, and then we're going to have range 3. Now, these 3 different ranges are obviously going to be at 3 different price points, which actually, you know what, for the sake of this video, let's just do it like this. We're going to have the middle range, the high range, and then the low range. Now, if price is, or let's actually put some labels here as well. So let's say SPY is going to be at, call it 380 here. Let's say this is going to be 380. Let's say this is going to be, I don't know, let's put 400. And then let's say this is going to be, random example again, we're going to say 440, right? So we have 3 different price points here. Now, if we see price doing this, right, where price essentially goes from 380 to 400, back down to 380 to 400, consolidates, goes back down, and then comes back up, and then we see price kind of bouncing off this area here. We see price going to the 440s, come down, come back up, retest, come down, come up, come back down into the 380 range. This is going to be our market structure levels, right? So let's just say we see that the S&P 500 is trading at this 400 range, and essentially price broke above this 400 range twice, and we see 2 rejections of this previous 400 range where it has resistance and now is holding as support, right? Essentially what we're going to be looking at doing is taking a buy position. Why? Because this previous resistance range that buyers or that sellers held for quite some time has now held as support and has formed a double bottom, which is another market structure pattern. With this double bottom, we now have a high probability setup on buying. Why? Because price is broken above resistance. price has made new highs, price has pulled back down, made a higher low, and now we're starting to reject and go bullish. Again, these are all signs of bulls. The more confluences you get to buy, the better, the higher the probability that the trade is going to work out in your favor. So that's when you want to take a long position. Then you ask yourself, well, if I do take this buy position, where is my stop loss going to go? Because my stop loss needs to go in an area where the trade is no longer valid. Obviously, if we see that the S&P 500 index is holding above 400, then we're going to set our stop loss under that zone, where if price hits that zone, then this trade is no longer valid because we're looking for the S&P 500 index to continue to hold this 400 level. Now, if price does break above or break under this 400 level, then we're wrong and we're going to close our trade at a loss, and that's part of the game. That's the probability side of things. But again, in a 70-30 chance, we have a 70% chance of winning. So this is where we look for an edge in the market. And by taking the trend into consideration, where we have 1, 2, 3 leg extension to the upside, a double bottom, rejections of 400 previous resistance, now holding a support, we then ask ourselves, okay, well, if price does reject this 400 level, where could we possibly go to? And that's where the other probability comes into, the probability of targets. Your number one target should always be the previous high, being here. Why? Because if price breaks above this high, then for sure it'll go higher. But that's if price breaks above that high. So our main target is going to be, call it 420 or 410. That's going to be our next target. And if price breaks this 410 level, then we could definitely see 440, which then risk reward comes into play. But this is basically how we trade support and resistance levels. Now, if we see that in the past, we see some rejections of 440, then we see price kind of come up, retest, reject, come up, reject again, and price rejects 440. Now we have a double top pattern, and price is rejecting 440, and sellers are holding this 440 level. You have to ask yourself, well, if price rejects 440, then we could definitely come back down into this 420 level. And if price rejects, or if price gives us that rejection of 440, we could easily see price come back down into this, call it 420 level here, where we could take profit off of. And again, tying in your aggressive and entry signals, aggressive and conservative entry signals. That's what you're going to be looking for at this resistance range. Then your stop loss goes above this resistance range, where essentially now that price has given us that rejection of this 440 range, our stop loss is going to go above the highest rejection. We already have our entry signal, so we have two criteria checked off: stop loss placement, our entry signal. Again, our stop loss is going to go above 440 because we're going to be looking at selling, and if price rejects 440, it has a high probability of coming back down into the 420 range, which was our previous support range. And that's going to be our target. And if price breaks that, then we'll look at 400. Now, if price does continue to do that and we have a positive risk reward ratio, then that is a good trade to take. You're taking a trade at resistance. You took a trade here at support. Now, if price breaks under 4, or if price rejects 400 and you see it back at your 420 range, it's like, okay, well, now price is in a downtrend. It broke under its previous higher low, forming a lower low. Could this be a potential higher low question, or a lower high question mark? Now, if you see price giving you that previous that conservative entry signal or aggressive entry signal at our previous at our previous support, and it is now holding as resistance, we have resistance in a bearish trend where we have an aggressive entry or conservative entry signal. Now comes the stop loss and take profit placement. I can place my stop loss above 420, call it at 425, 430, and my target will be 400. Why? Because again, it is the highest probability of that area getting hit, and then it gives me a positive risk reward ratio on my trade. So this checks off all of my criteria as well, and that is the support and resistance trading that we're going to be looking for. Right now, I'm gonna kind of remove all of these drawing tools because it is a lot. I'm gonna go over a few more chart examples for you guys here. Get rid of all this. Right, and now let's go back into the charts. So again, that's where this trade idea came from, right? We had a price in a bearish trend break under 440 here, right? It came down, formed lows at 418, then pulled back up into 440, giving us that aggressive entry signal. Stop loss goes above the high, take profit at the next low. That was great. Now again, Price broke under our major support level being 4,000, let's call it, or 400, let's call it. Made new lows at 39 and then pulled back up into this 4,000 range where resistance continued to hold. Creates, again, we're in a bearish trend. We have our entry signals. Our stop loss placement is going to be above resistance, and our take profit placement is going to be at our next level of support. Now, when we're buying, we're simply doing the same thing, just literally flipping the script. We have resistance at 39.83, which is our previous support range over here. Price made new highs at almost 400, came down, held support not once, not twice, but 3 times, gave you an aggressive and conservative entry signal. At that point in time, this is where you take your entry anywhere here, here, or here. Right, your stop loss goes under the low, your take profit is resistance or the next resistance range, which would be up here. And again, look at the same thing that happened. This in this situation is a break and retest. Right, you had price break above the highs in a bullish trend. Resistance is now held as support, and then you look to buy up into your next resistance range. And that is simply going to be our support and resistance trading, guys. So now this was just the simple breakdown of trading support, trading resistance, and again, it comes back down to your conservative entries, your aggressive entries, and things along those ranges here. You know what I mean? Now we have another example over here where we have price come down. You have a rejection already of this 39,000 range. You have a rejection of this 39,000 range here. Again, you could definitely look for a bounce play, right? Where essentially you have price come up, bounce off this resist or this support range, reject, come back down, retest. You now have 2 retests and rejections, and you take a buy up from the previous support range up into your next resistance range, which again, you have resistance at this range over here, you have resistance at this range over here. You set yourself up with a position that looks like this, where you entries at an aggressive or conservative entry, stops under support, take profit could have been, your TP1 could have been the previous highs, TP2 could have been the highs up here. That's a simple support bounce play. Very, very simple. Again, and you could have looked at multiple different examples over here. Again, we trade support and resistance, supply and demand, because there's liquidity in these areas, and we look for liquidity to give us that buying or selling pressure opportunity, where if we identify that there's buying pressure at support, we buy. If we identify that there's selling pressure at resistance, we sell, and that is going to be it, guys. So obviously you're going to see a lot of different examples of me breaking down a bunch of different setups throughout all the webinars, all the chart breakdowns. But again, I didn't want to give you guys a million examples just to make this video super long, just so you guys could just get a bunch of different examples. But more importantly, I want you guys' attention the entire span of the video and go over the simple yet effective system that I basically trade on a day-to-day basis. And other than that, everybody, I will talk to you guys in the next video.